Ladies and gentlemen, you better be ready for this week for the economy and for the stock market. We have a lot to cover in this video because there's a lot going on. We have big tech reporting earnings, and we have the FOMC statement, the press conference, the interest rate decision on Wednesday, which we have to break down in this video. So guys, hit the like button, make sure to subscribe, and I just started sending out my top 3 stocks for free every single Monday. Just check out that link down below. Feel free to sign up. All you have to drop is your email and your first name. And did I mention that it's free? Yeah, it's free. Every single Monday morning, I'm sending you guys my top 3 stocks. So check out that link down below. And with that being said, cheers. Let's dive right into the video. So check it out, man. We're coming off of a very strong Friday for the stock market where pretty much every stock on my watch list went up. All the indexes crushed it. We had the S&P and the NASDAQ go up around 1.1% on Friday. The Dow crushed it, up almost 1.7%, and the Russell went up almost 1.7% as well. And the VIX has come down after going up like crazy. You guys probably remember the VIX almost hit 20 points a couple of days ago, and now we're down to about 1640 on the VIX. So it has come down a good chunk, which is good. And again, there's a lot to cover, man. We have big tech reporting this week. We have the FOMC statement, the press conference, which is always a fun time, right, for the economy, for the stock market. So yeah, let's just get into it, guys. SPY right now looks like it wants to break out potentially, above 550, which is the next main resistance that I'm looking at for this week. So keep your eyes on 548 to 550. That's kind of where we double topped on Thursday and Friday, and that's right by the 180 moving average on the 1-hour chart. So that's where my alert's at. That needs to break on SPY, and Triple Q needs to break out of 467 to about 470, 475, right under this 180 SMA. That needs to break on Triple Q for this downtrend to break, essentially, right? And with earnings coming up, guys, this could be the week, depending on how the companies do, where we do get the breakout, where we do start to get the reversal here, which we have been downtrending. You guys probably know that we have been downtrending for a little bit here. So yeah, let me cover these numbers very quickly for the FOMC statement, or the interest rate, kind of what's projected here. Let me actually pull this up and I'll show you guys. This is on Wednesday, and don't worry, we'll cover the stocks after this part of the video. So this is on Wednesday, guys. It's coming at about 2 p.m., right? Yeah, it's always at 2 p.m. So 2 p.m. East Coast time, we are getting the federal funds rate. Boom. If I click this, you guys will see here the interest rate at which depository institutions lend balances held at the Federal Reserve to other depository institutions overnight. So we're going to get this number, which it's scheduled 8 times per year, if you guys didn't know. So it's projected to be at 5.5%, and right now it's 5.5%. So nothing's really going to change in terms of the federal funds rate, and we're going to get, which is more exciting, the statement and the press conference. Yes, the press conference is very exciting, where we get Jerome Powell. He says this whole spiel, right, for a little bit. Then he gets the questions. He answers. He dodges some questions, but he answers them, sometimes he dodges them. You guys know how that goes. But we're going to get that at 2:30 p.m. Eastern Standard Time on Wednesday. And trust me, guys, these events, if you guys haven't, watched the press conference or lived through one of these, or if you haven't paid attention to them before, they move the markets, guys. These events, whatever you want to call them, meetings, they move the market. So get ready for that. On top of big tech, we have this. for this week, which makes it even more, eventful, right? So the first company that I want to go over, guys, is Amazon, ticker symbol AMZN, which, full disclosure, I'm long Amazon. I've owned the stock for about a year and a half now. I started buying, actually, probably more than a year and a half, or over a year for sure. I started buying in 2023 at about 80, $90 per share. And I've been buying periodically here over the last couple of months. I bought more in the mid 170s. I bought more recently, I think last week at 187, or maybe the week before that. I bought more at 183 recently. So this is one that I'm averaging up on. I believe this stock will do very well. Maybe not right after earnings, but over time, I think will be a $250 plus stock here on Amazon. So I'm in it. I want to increase my ownership. So on average for earnings per share, they're coming out on Thursday, I believe. Let's see here. The 1st of August. Yeah, I believe that's Thursday. So EPS, they're looking to do 94 cents versus the 65 cents from last year. Nice growth there. And revenue's barely going to grow, $136.59 billion versus $134.38 billion from last year. That'd be up around 1.5 to 2%, pretty much nothing, pretty much at break even. And you'll notice that with a lot of the big tech stocks we're talking about today, a lot of them have pretty much stagnated revenue-wise year over year. So we'll see how that plays out. And overall, the chart looks really good. I mean, there's nobody denying that. I mean, if we draw out the channel tool, you guys can see now we're at the bottom of this channel. We're pretty oversold, down from 201 to about 182. So we're down about, let's see here, guys, 9-10%. So we're pretty much in correction territory now, pretty oversold as well. And we're noticing a bullish divergence on the RSI down here. So if this company beats, if guidance is strong, I expect a nice snapback here. I can't see a scenario. Obviously, it's possible, but I can't see a scenario where they completely drop the ball and the stock just tanks. I mean, it's possible, but I don't know. We're already down 10% heading into earnings. How bad could the earnings be to bring it down even more in that aggressive manner? Sure, could it come down $5, maybe $10? All right, it could, but could I see it dumping down to the 160s? Maybe under that? There's no way, in my opinion. But who knows? We'll see. At this point, we're in the channel, so let's see if we get a bounce here in the low mid 180s. That'd be a good spot for the bulls to bounce. So Amazon, I'm excited about. I'm in this one. And Apple is another one for this week that I don't own. I used to own it. I sold out of it recently. I've owned it for years. Now I just think it's way overvalued. We'll see how it goes moving forward. But my mind's still on Amazon, guys. Apple is this week, I believe, on Wednesday. No, they're on Thursday, same day as Amazon after the bell. And their stock's pretty beaten down as well over the last couple of days, 2 weeks. It's down about 8%, but still obviously up a lot over the last couple of months. So we're in a spot where we're a little oversold in the short term. We're right about above the 180 moving average here. So if this company reports good numbers, who knows, man? This is one that I'm a little bit more iffy about in the short term. I don't know. I think it ran up way too much recently. I don't know if that's warranted. The fact that it ran up like, $80 per share, or about 45% off the lows. I don't think that is sustainable. I feel like we could get a further pullback on this if they drop the ball on earnings, but who knows? You guys tell me. What do you think? I mean, look, EPS is projected at $1.23 versus the $1.18 from last year on revenue of $77.57 billion versus $76.41 from last year, up around 1.5%. So Amazon and Apple, guys, they're pretty much neck and neck when it comes to revenue growth projected year over year, right at 1.5%. In other words, pretty flat, right? So we'll see, man. Apple, with their whole Apple Intelligence rolling out into the iPhone 15, that's going to be interesting. A lot of people are projecting that the 16 is going to be the next super cycle for the iPhone. It's going to, explode their sales, which that'd be great. We'll see, guys, how that goes. Maybe that's already priced in. I mean, stocks are forward-looking vehicles. And again, we ran up 45% off the lows. Even now, we're still up 35% off the lows, even with this pullback. So, yeah, that could be priced in. And if they report bad numbers or disappointing numbers, there could be a further sell-off here. But overall, guys, I like Apple as a company. I think they're great, but as an investment right now, I think it's a little bit frothy, a little overbought. But who knows? I could be wrong. What do you guys think? And Microsoft is another big tech name for this week, down about $40 from the highs, or about 10-11%. All right, it's in correction territory, and they're looking to do EPS of 270 versus 269 from last year, versus revenue of 59.18 versus 56.19 billion from last year. And their revenue is actually growing about 5.3% projected year over year, which is not bad, but still pretty flat. And all these tech stocks, guys, their charts look identical pretty much, right? We have the uptrend. We're in the channel. Now we're at the bottom of the channel. On all of these, we're pretty oversold in the short term, right? And a lot of them have bullish divergences with the RSI. So Microsoft is looking the same way, just like Apple. You guys saw Apple, right? Just like Amazon pretty much, right, at the bottom of the channel, and just like the next one that we're going to talk about here in a second. But Microsoft's one that I'm not in. I actually haven't owned Microsoft stock in years. I used to own it, I think, in like 18, 19, right around that time period, maybe 2020 as well. But not that I don't like it. I just don't want, personally, guys, I don't want to have all my individual stocks be big tech stocks. I mean, that's kind of repetitive, if you will, considering all the indexes, they're heavy weighted towards the big tech stocks. So even if you don't own Microsoft individually, you own it via an ETF that you own most likely. So I'm not in every big stock and big tech stock individually, but I do own ones that I think are at good values. Better than the other ones value-wise. Like for example, I own Google, I own Amazon, and I would own Meta if it gets to the right price. It's very close. I think their value is, pretty good there. And speaking of Meta, let me pull it up. META is the ticker. This one, I'm very close to buying. If this one comes down, hopefully it crashes after earnings. That'd be ideal for me for an entry point. If this comes under the channel, I mean, they're already trading at a pretty good PE ratio. I forget exactly what it's at, but it's pretty low for the growth that Meta's seeing. By the way, they're projected to grow revenues by 16%. So they're looking to do on average $35.22 billion versus $30.4 billion from last year. Again, up 16%. And EPS is coming in projected at $4.34 versus $2.98 from last year. So pretty good growth there for Meta. It's down a good chunk here, about 15-ish% off the highs. So it's almost in a bear market, guys. And I'm noticing a pretty nice bullish divergence on Meta here. If you look at the RSI, so they're on, what day are they? On Wednesday, and I forgot to mention Microsoft's probably on Wednesday as well, or maybe Tuesday actually. Yeah, they're on Tuesday. That's right. After the bell on Tuesday, we have Microsoft. So keep your eyes on all these big tech names, guys. Meta is the one that I'm eyeing up the most right now in the short term as a buy. Especially if it tanks under, let's say, the mid 400s, that'd be ideal for me to buy. What do you guys think about that? I'm very curious to see where your head's at. So the next one here is AMD, which I bought some shares in the mid 150s. Now I'm down as this thing has completely collapsed heading into earnings, which honestly could be opening up for a nice rebound if they do crush earnings and give investors some confidence like, hey, look, AMD, hey, we're doing pretty well, guys. The stock shouldn't be down $50 in the last couple of days. maybe we get a rebound if we get that, right? If earnings are better than expected. I mean, look, for Pete's sake, the stock's down 25% in the last 2 to 3 weeks, which is insane to me, guys. But yeah, that's the stock market for you, right? It goes down. Individual stocks get clobbered more than the indexes. It's the name of the game, right? And it's not a huge position for me, AMD. It's not. But it is one that I was buying in the low mid 150s, right? I bought even some at 160 flat. But yeah, I'm down on this, and we'll see post earnings how it goes. If it comes down even more on a good earnings report, I'm probably going to buy more, but I suspect, I have a feeling we will get a nice rebound on AMD. It's only a matter of time, in my opinion. We'll see how that goes, but they're actually not looking to grow revenues at all right now on this quarter based on last year's quarter. They're looking to do $5.26 billion versus $5.36 billion from last year. So their revenue is actually going to go down about 1-2%. And their EPS is projected at 62 cents versus 58 cents from last year. Not bad. So AMD is another one that I'm close to buying more of. If it comes down even more, which I don't see it, but never say never, guys. And McDonald's, one that I just bought, right, is one that's reporting tomorrow on Monday. I just bought the stock, I think, on Friday, and I'm excited to see how it plays out. EPS for McDonald's is projected at $2.82 versus $3.17 from last year on revenue of $6.08 versus $6.27 billion from last year. So actually, McDonald's is going to be down 3% year over year revenue-wise, but I think the value is actually pretty decent right here, hence why I added a position. I bought back into the stock, which I've owned McDonald's before a couple of years ago, sold out of it, made money. Now I'm back in it. I think the P ratio is right around a 20. The forward P might be in the high teens. I forget. I have to double check on that. But yeah, McDonald's, I like the company. I kind of want to add it as a more stable position, if you will, in my portfolio. It's obviously not it's not like there's no volatility with McDonald's, but it is a quote-unquote safer company, safer stock. I wanted to add it to my portfolio, and I did that, and I'm planning on buying even more here moving forward. It's just a starter position that I added, and they're on Monday, like I said, tomorrow in the morning. So the first earnings report out of the bunch that we've talked about is McDonald's. And we also have Starbucks, which I believe is on Tuesday. Let me double check that. I believe they're on Tuesday, guys. Tuesday after the bell, we're getting Starbucks. Their earnings per share estimate is 86 cents versus $1 from last year on revenue of $8.5 billion expected. So Starbucks, guys, yeah, they're struggling. In China, there's a lot of conflict going on. There's protests. There's, from what I'm understanding here, there's people that are boycotting Starbucks, right? I'm not sure how much of a material impact that has on their sales, but I know for sure they're struggling big time in China. That's having a huge material impact on their sales. So this company's just been struggling for the past, let's be honest, year at this point, over a year. I mean, look, the stock's at the same price it was at about 2 years ago now. And on the max chart, you'll notice this stock's pretty much at the same price that it was 4 years ago as well, which is not pretty. I mean, look, even back in 2015, guys, come on. Starbucks was at $65 and now we're at $74. This stock's pretty much at almost a decade low right now. So I'm not looking to necessarily buy into this turnaround play. Like I've said in my other videos, I'm already involved in a couple of turnaround stories here. I was in Nike, starter position in Nike. I actually cut out of that. I'm like, I don't want to deal with the turnaround story here in Nike. Although I do believe it will do well over time. There were other places that I wanted to put my money, so I cut out of Nike. Starbucks is a true turnaround story. If you believe in it, it's going to take time. but it could bounce back over the next couple of years, but I don't want to be a part of it personally. We'll see if that changes. It might over time. My opinion might change. But yeah, that's it for this video, guys. 7 companies, 7 stocks I'm watching, and I just realized we're 20 minutes in. This is probably the longest video I've made in recent time. And the crazy thing is, when I started YouTube before the TikTokification of the internet, essentially, all of my videos were 20, 25, 30 minutes long, and my average view time was like 10 to 12 minutes. Now, obviously, my videos have come down in length because of people's attention spans, right? My average view time is like 4 to 5 minutes now. It's crazy, but yeah, maybe I'll bring back the longer videos if you guys are interested. Let me know your thoughts in the comments. Don't forget to hit that like button and to sign up to get my top 3 stocks directly to your inbox for free. Did I say that right? For free every single Monday morning. All you guys have to do is sign up down below, put your first name and your email address. Boom. That's simple. And with that being said, guys, cheers. I'll catch you all in the next video.